All right, so today we're going to be talking about bearish fair value gaps, which are called inverse fair value gaps. So that's going to be the title of the video, inverse fair value gaps. But they're really just bullish or bearish fair value gaps. So um, like I said in my previous video, you're going to have to watch my previous video to understand this video. But So fair value gaps, bullish fair value gaps, I went over those the previous video. So now I'm going over bearish fair value gaps, which are the same exact thing, but in just bearish candles and move down instead of moves up. So yeah, I'll show you guys some examples. Boom, right here already. Um, they're literally the same exact thing as fair value gaps, bullish fair value gaps. They're just bearish. So it's not going to be a long video because I already showed bullish fair value gaps, but these are just the same exact thing, just on move down. So they're within 3 candles. Bullet or bearish fair value gaps. So bearish means the trend is downwards, and bullish means it's going upwards. So right here, boom, we had a huge move down, huge dump down, and we created a fair value gap, inverse fair value gap, IFVG. You want to draw it. I draw mine from the bottom of the first candle to the top of the third candle. So the first candle now in this sequence, instead of being on the bottom, it's going to be on the top. So the first candle is this one. Let me turn this off. The first candle is this candle right here. That's candle 1. This is candle 2. And then this is candle 3. So yeah, it's literally the same exact thing. It's not difficult. You should be able to understand what I'm saying if you watched my previous video and went over into the market and did your homework and just looked at and found fair value gaps. And fair value gaps don't have to be they don't have to be all bullish candles or all bearish candles. It could be like this. This right here, top of the third candle to the bottom of the first candle for a bullish fair value gap. This candle right here is black, which is bearish, but these two are bullish. So you can do that also. It doesn't matter what color the candles are as long as as long as it's formulated like this. But yeah, so bearish fair value gaps, I'll go over more examples. Let me just remove drawings. So yeah, here's more. Draw my first one again. Top of the or bottom of the first candle to the top of the third candle, so it's just opposite from a bullish fair value gap. Let's see, top of the bottom of the first candle to the top of the third candle. Bottom of the first candle to the top of the third candle. There's a bunch right here. So these are all gaps. When you see a bunch of gaps like this in a row, you'll know that this is definitely a higher time frame fair value gap. So you can just, instead of drawing all 3 out, you can go to the higher time frame. Okay, what just happened? Let's go to the 1 hour. You can go to the higher time frame to where that dump was. Where was it at? Pretty sure it was right here. And it's just a huge gap. So let's go to the 5 minute. Where was that dump that I was just using? Yeah, boom, perfect. So yeah, this all is just a 1 hour fair value gap. It could also be a 4 hour fair value gap. It could also be a daily fair value gap. It could be whatever. So yeah, that's higher time frames and lower time frames. Let me know in the comments if you guys need to know more about those. I can explain more. But yeah, bearish fair value gaps, there's so many, they're everywhere. Here's one. So as you can see, bottom of the first candle, top of the third candle, gap in between. No orders came back into this gap, but let's see if it came back up eventually. And let's see if there was any pressure out of it. I don't think it has. Yeah, it hasn't hit yet. But near it is some pressure, so there's probably a higher time frame for a value gap right there. Yeah, let's keep going over some examples. I mean, I can come in here and just find like thousands, like right there, boom. Inverse fair value gap, boom. Inverse fair value gap. Jeez, I gotta turn this off, to be honest. Boom, inverse fair value gap. Let's see. Boom. Inverse fair value gap. Let's find a trade that you could take out of an inverse fair value gap. Okay, this could be one right here. So we have a sweep right here. This was the first breaker structure. Retrace kind of moved down already, but then it retraces back into this fair value gap right here. As you can see, this is a fair value gap. Price came back in on this wick. So right here, you could have placed your order at the bottom of this on the close past that low right there. Put your stop loss above that inverse fair value gap and then targeted all the way down to these lows. Say that low right there, because you could have gone all the way down to this, but I don't know. Did it hit? Almost? Yeah. So you would have hit after a couple days, but, or not a couple days, just a couple hours, but yeah. So that could have worked out. You can see how much like price wants these. So boom, right here. Price came down, created a inverse fair value gap, came back in to retrace it, and then it came down. So you could have gone down to the 1 minute here. Jeez, I just lost where I was completely. I was up here. Had to have been right here. Okay, I can't go that far. Yeah, let's see. Jeez. So yeah, literally boom. Look at this. This is the one I just showed you, but look at this. So on the 1 minute, instead of going on that low, you could have gone to here. It swept right here into this inverse fair value gap that was created on the 5 minute. It broke structure to the downside, retraced back up into this order block, which is something I'll teach you guys later on, and then broke structure to the downside right here. So you could have had an entry either right here or right here, and then just place your stops above the retracement and targeted all the way down. I mean, if you just went down to that low, good trade right there. You could have gone all the way down to these lows right here, and you would have hit, which is, what is that? 7 risk to reward ratio. Yeah, let's see. Fair value or inverse fair value gap. Would you look at that? Boom, right there. Let's see more. Let's see more. Okay, boom. Inverse fair value gap created right here. What did price do? Came back into this level and dumped out of it. Oh, look. Inverse fair value gap created right here. From the bottom of the first candle to the top of the third candle. Inverse fair value gap. Retraced back into it. What did it do right as it hit? Dumped straight down. Let's see. Let's see more. Let's see more. Let's see more. Let's see. Let's see. Let's see. I mean, boom. Inverse fair value gap right there. And this would have been a good trade. You gotta let's find, you gotta close past these highs, these smaller highs right here. Would have been a first breaker structure. Retrace this bullish fair value gap. And he would have entered on the close. Why do I feel like this is the trade I took? Could have been, but yeah, went all the way up. Could have put your stops below that low. I'm showing you guys how much these fair value gaps and inverse fair value gaps work. It's crazy. Oh, boom, right here. Oh wait, maybe I'm wrong. I lied. Wait, no I didn't. Wait, yeah I did. No I didn't. Let's go back to the 5-minute. So yeah, even this right here. Inverse fair value gap was created on a move down candle. Price came back into it once, went down out of it, came back into it again, and then dumped straight out of it. Like, look at that, just went all the way down. I'm telling you, these levels are one of the most important confluences you guys need to know in this market. Let's see. Yeah, boom, right here. Where is it? Where did I just see that at? Maybe I'm tweaking. I swear I just saw. Oh, right here. Boom. Inverse fair value gap created. Price came back into it and then dropped down after, swept out this low, and then boom. Went all the way up to these New York PM highs, which this would have been a great trade. Price came into this inverse fair value gap, dropped down, swept out these lows, and this fair value gap right here pushed up more. I'm telling you guys, this is like the most essential thing for trading right now. Like you see it so much, like inverse fair value gap created. I mean, it's simple. Came back into this level. What did it do? Dropped after. What did it do? Came back into that level, which it can happen. Can come in twice. Swept out this high. Not only that, but it came into this inverse fair value gap, and not only that, but swept out this high. And then what did it do? It dumped straight down. Holy crap, it dumped like crazy. Yeah, I mean, it's pretty simple. If you guys watch my previous video and then watch this one, you guys will understand it. They're just the opposite of, they do the same thing as bullish fair value gaps, but they do the opposite thing. So if price comes into an inverse fair value gap, it pushes price down. But if price comes into a fair value gap, it pushes price up. That's because they're bullish and bearish. So inverse fair value gaps are bearish, and normal fair value gaps are bullish. So yeah, I mean, I'm trying to think of any more that I can say, but I think that's all that I have. I had a criteria written down, but I think it removed it once I removed all my drawings. But yeah, I think that's all I got to tell you guys today. Let's see what price is doing at this moment in time. We had a sweep into this fair value gap, and then we had a retracement to this order block. These levels into this order block. So if price were to close, say, above this bullish candle, I'd enter long. Stops below, I'll say these candles right there. Yeah, let's see right here what happened here. So I'm going to teach you guys about order blocks in a little bit. They're more complicated to find, but overall they're basically the same thing as fair value gaps. They're just a little different. Oh my gosh, look at this. So one thing I forgot to tell you was it doesn't matter how big a fair value gap is or an inverse fair value gap. Doesn't matter how big it is. It could be tiny, but it can still work. So as you can see, there's one right here. There's a bullish fair value gap right here. What did price do? Came down into it and it rejected out of this like crazy. Like, that's insane. Even though it's tiny, it still pushed price up. So just remember that when you guys are taking trades and like, oh, but that fair value gap's small, it won't do anything. Yes, it can, bro. Yes, it can. I promise you it can. But yeah, I kind of wanted to see what this would do. Because it looks like a good setup right here. You see this was a clean bearish setup right here. Price came up, swept out, or created equal highs right here, came down, retracing the order block, and it dropped down all the way down to below that
fair value gap, which that move would technically be a sweep. We're still technically in an uptrend. There's probably, I was gonna say there's probably a SMT, which you guys don't know about yet, but that's something I'll teach you too. So these created relatively equal lows. So this is an SMT. While these didn't sweep completely, this can still be considered an SMT. So this is all the way up here, which means price probably wants to go up. So just say, honestly, just say I entered long right here. This isn't like my criteria to enter, but I just want to show you guys. Just go minus 1,000 paper trade. And then target the next high. So this right here would be a good trade. If I got to close past this bullish candle or this candle, this wick right here, it'd be a good trade. Usually I'd put my stops here, but since, I mean, it didn't even break structure right there, I mean, it's not, there's nothing really happening, but yeah. So I guess I'm trying to do the same thing I did yesterday, but it was kind of dope how it worked out. I mean, inverse fair value gap's really easy. I don't know what else to say about them, but yeah. So today Powell spoke. I'll teach you guys about economic news soon. But Powell spoke, this was the candle for it, and it just totally ripped up, created a huge fair value gap. So I'm assuming either today or tomorrow, I don't know what session, or not tomorrow, but Monday. No, geez, voice crack. Before Monday happens, it'll for sure go down. It hit that level right here. It'll definitely go into this gap eventually, but when you see big moves like this, you probably want to see more of continuations out of it. But otherwise, you could see some, you could see like a huge reversal out of it, but not normally. I'm still getting market experience, but from my experience, that's happened a lot of times. So yeah, don't know what else to really say. Oh wow, I'm actually up on my trade currently. I'm telling you guys, these setups happen in New York PM. I don't know what it is, but I keep finding setups in New York PM, and it's kind of crazy. Even if this doesn't go up, it's still a really nice setup. So I think that, yeah, look at that. I'm up 420 already. I'm gonna stay in the video just so that I can see what this does, because if I do this twice in a row, it'd kind of be crazy. Let's see. So this is where I actually would have entered, because it closed past that bullish candle. So if I was feeling frisky, I would have entered on that. But overall, it hasn't had like an evident like break yet. So I'm not too sure, but overall, this is a good setup. Look at this sweep, retrace, and then a break of structure. You probably, if you want more confirmation, you'd enter on the close past that level. Oh yeah, it's just kind of choppy right now, but it looks like it's trying to break up. So yeah, I guess if I wish YouTube had like pictures you could send, but yeah, honestly, this is a pretty great trade. Cannot even lie. Yeah, look at that. It's pushing up 500. Oh my gosh. Yeah, it's about to break. I see it. It's about to break up. It's going to have some trouble getting past these levels right here. This is a bit of a level. That's a level. It's going to have a little bit of trouble getting past that, but it's about to break. Holy crap, yep. Look at that. Look at that candle. Guys, I'm telling you, I know where the market's going. I'm telling you. And honestly, I might have to start trading New York PM session because this stuff keeps happening. And I've hit 3 trades in a row on New York PM session. So maybe one day, maybe after I get my first funded pass, then I'm just going to go into New York PM if I don't find something in New York AM. And I'm just going to trade this because this is kind of crazy. I've found 3 setups the past 3 times I've looked at it. So, yeah. I'll catch you guys, but I hope that this video taught you something. I'm not the best teacher, but I'm trying. And honestly, I think that I explained fair value gaps pretty well in the previous video. So if you just watch this video and take what you learned from last video, you'll be golden. Go in and find everything like I was doing, see where price reacted off of, see what it's doing, and yeah. But I hope this was a good video, and I hope you all have a good day. So, peace.